Welcome back, students, to my channel GK's Education. Here I am going to present a second video on companies' accounts. In the previous video, we had done the basic information about share capital, its various parts, and the basic journal entries that a company passes in its books on application, allotment, and on calls. So we did it with complete detail. So in this video, we are carrying forward this topic and are going to discuss some other details regarding the shares. The first one is calls in arrears. What is calls in arrears? When a company make a call for you can say the money, whether it is application, allotment, or any call, but the shareholder, when he fails to make the payment of amount due on the due date, so it is called calls in arrears. In that case, the company even then has to make a record or keep a record of the amount of the amount which was due but was not paid by a shareholder. Like when the amount becomes due and it is not you can say paid by the shareholder, so in that case we open a new account which is called calls in arrears, and the entry will be calls in arrears account debit to share call account, and when the amount due is paid, in that case the entry is bank account debit to calls in arrears account and to interest in the case if our memorandum of association or the company decides to charge the interest, but the interest cannot exceed 10% per annum. So it will be more clear with the help of example. Like here, ABC Limited issued 1000 shares of rupees 100 each. The amount is payable as rupees 25 on application, 30 on allotment, rupees 20 on first call, and rupees 25 on second and final call. All the shares were subscribed and paid except of a shareholder having 100 shares who could not pay for the second and final call. So give the journal entries. The entries will be coming as bank account debit to share application when the application money is received for like 1000 shares rupees 25, so 25,000, and then share application account debit to share capital 25,000, the amount will be transferred to share capital, and then allotment amount becomes due. In that case, equity share allotment account debit 30 rupees, as the allotment money due was rupees 30, so it will be equity share allotment account debit to share capital 1000 shares into rupees 30, 30,000 shares, and then when the amount is duly received, bank account debit to equity share allotment account 30,000 rupees. Then first call becomes due. Share first call account debit to share capital 20,000, and then bank account debit to share first call when it is received 20,000. Then share second and final call account debit to share capital means 25 rupees on 1000 shares. So share second and final call account is 25,000 rupees to share capital 25,000. And now when we did not receive the money for 100 shares, so the amount will be, the credit will be given to the total amount of 25,000, that is share second and final call account credit will be given to 25,000, but in the case of debit, bank account will be debited for 900 shares with rupees 25, that means 22,500, and calls in arrears account will be debited with for 100 shares rupees 2500, that is 2500 rupees. So this will be the basic entry, and when the amount will be received, we shall pass the entry bank account debit to calls in arrears for 2500 rupees. So this is how we are going to treat calls in arrears in our accounting books. And another one topic is calls in advance. It is true that sometimes a shareholder fails to pay the amount. So, in that case, calls in arrears account is opened. But there is one another case where the shareholder is having a complete money and he decides not to wait for the calls being made by the company. So, in that case, what he does, he pays the amount of calls or allotment along with application. That means he can pay the money in advance just to relieve himself from the responsibility. So when the shareholder pays the whole amount of calls not yet made by the company, he pays it in advance. In that case, it is termed as calls in advance. So here again the company will make a record of the money received in advance. So the entry will be when the company receives the money in advance, the entry is bank account debit to calls in advance account. And when the calls we can say the amount is actually due, in that case it will adjust it against that particular call account. So the entry will be calls in advance account debit to particular call account. And then in case the company decides to pay interest to that person for making the payment in advance, so in that case the interest will be interest on calls in advance account debit to bank account, because the company will pay. So calls in advance, we can say it is our liability. So it will be shown in the current liabilities of our balance sheet, and the interest, it cannot exceed 12% per annum as per the company law. So these entries will be again more clear with the help of an example. Here we are going to take that example. It is XYZ Limited issued 1000 shares of rupees 100 each, payable as rupees 25 on application, rupees 30 on allotment, and rupees 20 on first call and rupees 25 on second and final call. So application money was duly received. On allotment, a shareholder having 100 shares paid the entire amount. Give the journal entries of all the calls. So in that case, first when the application money is received, bank account debit to share application account 25,000, that means 1000 shares for 20 and 25 rupees per share. So 25,000 rupees, it will be transferred to share capital by the entry share application account debit to share capital account 25,000, and the allotment money is rupees 30. So allotment money becomes due share allotment account debit to share capital 30,000 rupees. And when the amount is received, in this case with allotment money, the company receives total amount for the 100 shares. So the entry will be, first we will make share allotment amount, that was 30,000. So the credit is to share allotment account 30,000 rupees, same amount. And to calls in advance, how much is calls in advance? For 100 shares, 20 plus 25, that means 45 rupees on 100 shares. So 45 rupees on 100 shares means 4,500. So the total amount debited to bank account will be 34,500. And then first call becomes due. Share first call account debit 20,000 to share capital 20,000. That means first call was of rupees 20. So when the entry of money received, it will be bank account debit 18,000, calls in advance 100 shares 20 rupees each we received in advance, so it was credited. Now a part will be debited, that means for 100 shares rupees 20 first call money will be debited 2,000 rupees. So first call account will be credited with the total amount of 20,000, bank account 18,000, calls in advance account 2,000, and share first call account will be 20,000. Now when the second call is due, we can say Yes, when the second call is due, the entry will be similarly. Yes, when the second call is due, again the entry will be share second and final call account debit for rupees 25,000 for 100 shares. That means share second and final call account debit for 25,000 to share capital, and when the money will be received, again similarly the entry will be for second call, we can say it will be bank account debit, then calls in advance account debit to share second and final call. So share second and final call will be rupees 25. So that will be 1000 shares into 25. That means 25,000, and calls in advance was 25 rupees on 100 shares, so that means 2500 will be here, and bank account will be debited with 22,500. So that will be the final entry of second call. Now here comes a topic of shares. We can say the shares can be issued with three conditions: maybe at par, maybe at premium, and maybe at discount. So what do you mean by the shares issued at par? Shares issued at par means the amount, the par value, that means the nominal value of shares when they are issued at the same value. Like we can say a company ABC Limited is having a shares of nominal value rupees 100 each. So when the company issues them at rupees 100, that means it has issued it at par. But in case of some companies having a good value, good market value, they can issue the share at the value more than the nominal value. Like if a company issues a share at rupees 105, so that is share issues, the 5 rupees will be premium and the shares issued are at premium. But in case of some other companies, like they don't get the proper uh, subscription, or at some or you can say sometimes they just have a need of money and want to decide want to issue the shares at value lower than the nominal value. That is when when they issue the shares at discount. So like if the shares nominal value is rupees 100 and we issued it at rupees 95, so in that case the 5 rupees will be the discount given to the shareholders. Let us discuss this in detail. First one is issue of shares at premium. So what happens when we issue the shares at premium? When the shares are issued at the amount more than the par value of shares. Like we have given the example, the share is having a value of nominal value of rupees 100, but as the company is having a good name, they know that whenever they will be issuing the shares, so they can raise a good money out of that. So it may happen that they can issue the shares at the value above than the nominal value. So if they issue the share at rupees 105, so the extra 500 will be premium. And as per company law, for this premium we open a new account which is called securities premium account. And accounting treatment of this account is, it is shown under the head reserves and surplus on the liability side. So the premium can be called in various stages. So now we are going to discuss those stages. Number one is when the premium amount is called with application money. So here again we take an example to make it more clear. Suppose nominal value of share is rupees 100 and we are issuing it at rupees 105. So premium is rupees 5. we are going to call application money rupees 20, allotment rupees 40, first call rupees 40. These are just for the you can say making the understanding. So when first case is when the premium amount is called with application money. So here how will we pass the entry? Bank account debit to share application account. Share application is of rupees 20, but here we are going to add rupees 20 plus premium because the premium amount is being called at along with application money. So entry will be bank account debit to share application account with rupees 25. And then now the bifurcation will be done to separate accounts. Share application account debit to share capital rupees 20 will be credited to share capital, and to securities premium reserve account or securities premium account rupees 5 will be credited. So this is how the first entry with application will go, and the basic other journal entries will go as per the model entries or as normal. So the second case comes when the premium amount is called up with the allotment money. So in that case, here nominal value rupees 100, issuing price rupees 105, but here we are calling the money with allotment, not with the application. So in that case, when the allotment amount will become due, the entry will be share allotment account debit rupees 45,000. Allotment money was rupees 40 plus 5 of premium. So share allotment account debit 45 rupees to share capital rupees 40, and then to securities premium reserve account rupees 5. And when the amount will be duly received, so bank account debit will rupees 45, and then share allotment account rupees 45. So this is how when the premium amount will be called with allotment money. And the third case is when the premium amount is called with call money. Share call account debit 45 rupees to share capital account 40 rupees to securities premium account 5 rupees. Again rupees 40 was due plus rupees 5 of premium will be added. And when the amount is duly received, bank account debit to share call account with rupees 45. So this is how we are going to deal the premium of shares issued. And the another case is when the shares are issued on the discount. So when the shares are issued at a price less than the nominal value of the share, in that case, like if the share is of rupees 100, nominal value rupees 100, but we issued them at rupees 90, so extra 10 rupees will be the discount. In that case, when the discount will come into the books, the entry will be bank account debit, discount on issue of shares account debit to share capital account. We will discuss all these in detail in the coming videos. So thank you, and we'll discuss the other parts in the coming videos. Thank you very much.